All right, guys, what's up? It's been a little while. Okay. All right, guys. Okay, need to roll these over. All right, what's up, guys? So, yeah, okay, yeah, movie alert. Oh my god. Oh. All right, what's up, guys? Sorry, I'm a little stressed out, but we're back, and just let me do something real quick. Exact quantity, MES. The fuck? All right, just give me 1 second. MNQ. All right. All right, guys. Oh. So we're back in action. Let me explain what's been happening. So this past week was rollover week, right? So the contracts were rolling over from March to June. So we are now on the June contract. Okay? And give me 1 second. So, please. So, so yeah, we are now on the June contract. Last week was rollover week. So I don't trade on rollover weeks. I don't trade on rollover weeks because what happens is on rollover week is that since you have two contracts being traded that week, you have the old March contract and the new June contract. You have some people that either roll over early or roll over late, and it typically takes a week for the old contracts to fully expire. So that whole week is like a transitionary process in which all of the volume from one contract from the old contract is shifting over to the new contract. And that creates a lot of inconsistencies with Delta. And I trade mostly off of Delta. I rely a lot on Delta to trade and to make my decisions. So it's not wise for me to trade on rollover week when Delta is a little weird, when volume is split. And historically, every time I trade rollover week, I don't do well. So that's why we didn't trade this past week. It was rollover week, waiting for all the volume to get settled into the new contract. And now what we need to do now is, if you can see, um, all of our zones and lines got shifted. Yeah, see, this is something I despise on rollover week. But all of our zones got shifted, and now we're just gonna be um pretty much fixing everything. We're gonna be going back, going through all of our zones, and just, yeah, pretty much fixing everything, marking out our zones, and getting ready for tomorrow, pretty much. So yeah, just gonna get this ready. So we're on NQ. I have all these here. Just let me delete that. So we're on the new contract. We don't really need to just remove all these zones. So yeah, we're gonna be doing our Sunday night analysis with the new contract, and we're going to be pretty much fixing our charts, adding our zones to our charts. Just let me go back and fix the daily here. All right, that zone marked out. Got this marked out as well. If I remember correctly, got that marked out as well. And we have this. And that. So got our daily all done. So, I mean, like, this is a perfect example. So this is measuring volume, these blue bars down here, and we'll see the past week started off with low volume and started to increase steadily. So, you know, that just goes to show that there was, you know, volume was split between both contracts. And, you know, we were waiting for that to settle down a bit. Yeah, okay, this. All right, just delete that. Bring this down here. Major, actually, yeah. All right. And this is old. Move that. Oh shit. What the fuck? My gosh. Really testing my patience. Yeah, it's been a little while. Alright. Alright, so let's get on with it. I can already tell this is gonna be a pretty big zone. Let me take a look here. 11 o'clock candle. Okay. Don't got a whole lot going on in there. But let me see. How big is that zone? 125 to 171. That's pretty big. But we don't have a whole lot of. So I'm looking to see if there's any strong sellers here. We're not. There's nothing noticeable here. So I mean, we got imbalance there, but nothing too noticeable. So maybe that imbalance there, but nothing too crazy. So this is probably not going to be this zone's probably not going to be a big deal, just because. Let's see here. All right. Just because we don't have a lot of sellers there, we don't have a ton of big sellers, means that this zone is probably not going to be defended too heavily, right? Or marking out our zones, these are pretty much levels of defense that we're looking forward, looking for and looking to. Like this, for example, would be a good wick. This is what, the 8 o'clock candle. Yeah, we got two major imbalances there. 1,000 imbalance. It's huge. So that's the 8 o'clock candle. So right there, yeah, that would be a nice wick to grab. So let me just put that there. All right. And there you go. Nice little wick there. You got sellers defending that level as well. And it looks like we had some range at this level. Some accumulation. Yeah, so there's probably prior sellers defending that area. Yeah, not too much. Little some imbalances, but yeah, not too much. So it's not here. And this, let's delete that. I don't know what that is. So we got two zones, and obviously tomorrow morning when the overnight session plays out a little bit more, we're gonna take a look at more zones, more of the price action that would have developed during the overnight session. All right, down here. Okay, you see, this is pretty good. So we don't got anything noticeable down here, but I want to take your attention towards these two areas right here. We have some oversized imbalances. Another imbalance there as well. Yep. You got the trade detector going off here, some big orders there as well, big buys, point of control there. And yeah, so this entire bottom range, you have a bunch of imbalances coming in. It looks like the line in the sand would be right here at 041, just because this is where the last noticeable imbalance is. That'll probably be the line in the sand, and then you give a couple extra points, I guess, for the stop. But theory is we have all of these buy orders down at the bottom of this range. Buyers are going to want to defend the bottom of that range pretty well. Or there's going to be a lot of passive orders there. So if we see sellers try to attack this zone that I'm marking out right now, if they try to attack this zone tomorrow, it's a good chance we could see some absorption. And like I said, absorption is what we primarily trade. So absorption is what we're trading here. It's our main area of focus is trading absorption. A textbook absorption to see tomorrow would be would be these big order blocks here, these big buys defending a position. If you get sellers that come down and try to attack this gold zone that we marked out here, they try to attack that gold zone, they get absorbed, and they pretty much exhaust all of their capital. And the passive orders come in, take out the offer, and then this area would have been defended pretty well. Would be a very good place to take an entry, take a long entry in. So, let's see. And then obviously, see that's at 100, and then here's all the way down to 55. It's 57 to 40. So that's a very good zone, very tight zone, textbook zone. So that'll be really good to get into. Very nice area to get into. Up here, I'm not so sure. If we get here, I might not even take a short, just because it's a big zone and there's nothing noticeable in there. There's nothing that grabs my attention when I look at these candles up here in that blue zone. All right. Some prior movements. Yeah, we don't really have anything. So bottom of the range seems to be here. We break that, we're done for. This is the line in the sand. We break this gold zone, we're breaking this low. 100% guaranteed. What, 04? Yeah, we break 04, we go down into 17K territory. That's because right here is where we have all these buyers defending. And we break that, we break through those orders and take their stops, then we're going down. So yeah, it doesn't look like there's too much here on the NQ. Looks pretty good. Let's see, NQ. So we've been in an uptrend for a while now, and it seems as if, take a look here, beginning of the week was the 11th. Let's go here to the 11th. We've been ranging the entire week, leading up to the rollover week, and rollover week we've been ranging. So yeah, now that we have all the volume focused on one contract again, maybe we'll break new highs again. Maybe we'll break lows. Let's see. Maybe there's a catalyst tomorrow. I didn't check for news. Check that tomorrow. But ES has been in a very clear uptrend. Let's see, oh, this is definitely fucked. The Dow is a little bit less indicative. It's a little, yeah, the Dow is pretty much just ranging for the most part. So, yeah, it's oscillating between these moving averages. Okay, so we have NQ marked out. What we need to do now is do the same for the ES. And I'm going to be moving these zones. All right. All right, put this here. Oh, we have. Well, actually, let me see. Behind. So this would be a strong low. Um, that would be a weak low. Okay. So we're only marking out the strong lows, which really this is not a strong low. What is a strong low, might ask? I'll tell you. A strong low is any low that makes a higher high. So for example, this low right here broke the previous high and made a higher high. It even broke this high as well, made a higher high. See this low right here, this low point right here, the higher high, let's say is right there, all-time high, didn't break. I wouldn't consider this because this was a downtrend. We're looking for an uptrend. Considering this is a pullback, this is a weak low because this wasn't strong enough to break this previous high. So we don't mark out the weak lows. The weak lows get taken out pretty quickly. I mean, look at this low right here at 175, 176. That's a weak low. Didn't make a higher high. And take a look at what happened here. It just got broken straight through. Yeah, it came back and it got respected later, but only a couple hours after it was already broken. So if you'd be trading off of that low, you would have been chopped out, right? So that's what we're looking for. We're looking for strong lows. See, this would not be a strong low because it failed to break that high. This would be a strong low. Higher low, I mean, because it broke that high. It came back later. Yeah. So, for example, show you guys this real quick. This strong low, once we came back and retested it, we wicked off of it perfectly. And then we broke it and then wicked off of it again and then we broke it for real. But at least the first retest was right on the money, right? So that is the concept between strong lows and weak lows, and the same can be applied to strong highs and weak highs as well. So we got the NQ already mapped out. Let's see. Okay. So as NQ hourly. Now, okay, get the ES. Oh, the ES looks like a fucking mess. Alright, let's check out this low first. So this looks pretty interesting. Look, another imbalance as well. So we got two oversized imbalances here. Pretty big, 1870, 1322. That would be a very good low to mark out, even though it's not a strong low because it's not creating a new high. The price action is still being generated here. So if we come back and revisit that, that would be a very good zone to take a long in. It's also a very tight zone. And so, give me a second. We always look for these tight zones. We always look for these tight zones because it gives us a very good entry. So if that's from 69 to, let's say, 67. That's like a 3-point range. That gives us very tight entries, and we can have our stops very tight. So we're taking a lot less risk. And this is pretty much a safe trade. It's a safe zone. I mean, you have a bunch of buyers down here, a bunch of imbalances defending the bottom of the range. This would be, the line in the sand. You take along here. Your stop is about 3 points, 4 points for slippage. And if you break through that zone, then you can be confident that we're going to continue to move lower, probably break down the weak low and hit down to the strong low. And if we don't, if the zone gets respected, if these buyers step in and absorb the sellers, then, well, there you go. You have a trade. You have a really good long entry. And, this is from 68. Right now we're at 89. So let's see if the overnight session gives us movement to the downside. I don't think in the ES it will move that much, but, we'll see. Now, here's the thing. You could also enter the bottom of this range as well. But the thing is that this is from 82 to 76. That's a pretty big range on the ES. It's a lot of risk to take on. And you're not guaranteed a lot because here we don't see any big imbalances. You get some volume sequencing here and some quota controls as well. But it's not as safe as a bet to take when you have versus when you have these big orders down here. So if anything, you can mark that off as a blue zone, right? But I'm not even gonna waste my time with that. I'm not gonna take a trade in that zone just because it's too much risk and it's not, you know, it's not confirmed. It's not giving me the best odds of winning. Take a look here. Okay, this might be interesting. What is the range on this wick? 95 to 02. Okay, so that's about 7 points. That's not that bad for the ES. 7 points is not that bad. It's just that there's not. Let's see. You got an imbalance here. 1952. You got 465. Selling some selling sequencing here. So, but it's not that strong. We'll mark it off as a blue zone. And mark that off as a blue zone. So when I'm marking off my zones as, when it's either blue or red, I'll give you a second. So when I mark off my zones when it's blue or like blue versus red, it's not just an identifier, an identification of a weak zone and a strong zone. There are different ways to play those zones as well. So of course, if you're coming into a strong zone, bottom of the range, that gold zone, that's a S plus zone, you are going to have a higher odds of winning that trade. So what can you do? Well, not only are you going to have a tight stop, you're going to be able to put on more size because you can have more confidence having all of these big buyers down here. You can have a tighter stop. So you're, even though you're putting on a lot of size, you're putting on more size, your stop is going to be tighter. So it might even be equivalent to taking less size but bigger risk. But the only difference here is that you have more reward. You have more potential for reward because this trade has a higher probability of succeeding. Again, nothing is ever 100%, but it is a higher probability. So, and here's another thing too. Gold zones, the S plus zones, they're very strong areas. If you have a lot of buyers down there in a gold area, gold zone, that means there's a lot of liquidity. And especially in a volatile market, all right, a market is volatile because it's searching for liquidity. So what that means is in a gold zone, you can take a trade preemptively when price hits that area. And when I mean preemptively, I mean you can take that trade without having to confirm on the 5-minute footprint chart because chances are the opportunity cost is that you'll miss that trade because with low volatility and a strong zone where you have lots of buyers down here, you have a lot of buyers providing liquidity, right? So that'll get filled up very quickly because again, when the market is volatile, the market is searching for liquidity. When that happens, when price hits a zone down here, when you got a bunch of buyers offering liquidity, price is going to hit that zone and run right back up. So you don't have time to wait for confirmation on the 5-minute footprint chart, right? And so with the gold zones, you can be a little bit more safe. You can be a little bit more preemptive and take those trades as soon as price gets into that zone because obviously, those zones are safer. You have a higher probability of success with those zones. And also because, like I said, in the volatile market, you might not get the opportunity to wait for confirmation. So you need to decide, is confirmation really important for you? If you already know beforehand, if you've done your pre-market analysis and you know beforehand that that zone is already strong enough and it already has enough confluence to it. Some people need more confirmation. But what happens is the opportunity cost of that is that so price hits that zone, runs up a couple points out of the zone, you get confirmation kind of late, you take the trade, and now what? you're 2 or 3 points in the trade above that zone, and you got to widen your stop to below that zone, so your stop is wider, right? And and essentially that's gonna create more risk. You can have more risk. So that's why pre-market analysis is extremely important, because you get to decide what zones you want to take, what trades you want to take beforehand, preemptively, and you can already decide beforehand what areas are going to be riskier than others just by looking at the order flow, by looking at the footprint chart and seeing that, hey, there's a lot of buyers down here. This is a very good area to defend. Might be a good area to take a long to defend, right? So, and the opposite is true for these blue zones. These blue zones that are wide, that, you know, have some potential, those are the ones that you need to wait for confirmation for on the 5 minute. And those are the ones that you have to be really picky on your entry with. Because, like we've already identified earlier, this zone right here on the 11 o'clock candle, that top wick, I mean, we identified that, hey, yeah, there's some potential here. We got some selling imbalances here. We got some selling sequencing, but it's not as strong as what we have down here. So this is not incentivizing me to take a preemptive trade, and it's a pretty big range as well. So when we get into this blue area, right, I'll be looking for confirmation on the 5 minute to see whether we're going to continue the trend and break out of it, or if buyers are getting absorbed up here, and then sellers can come in with the aggression and take this down lower, right? So, and then of course with the blue zones, your stop might be wider, because it's going to be a lot more risk to take. Your stop is going to be wider, and you're going to have less size. So that's pretty much how you trade these zones. Gold zones, you can trade with size, you can trade with certainty and preemptively. Again, not 100%, nothing ever is, but at least you can take it knowing that, hey, if I'm wrong down here, so are a lot of other people, and most likely we're going to break this and go to the downtrend. So it's not even going to be a stupid trade. It's not going to be a stupid loss, you know? But if you take a blue zone, you need to take less risk, widen your stop, and be a little bit more flexible with the price action, and be more flexible with your move. If you take that trade in the blue zone, buyers get absorbed and you get some points, so a nice downward movement, take profit quick. Don't be in the trade forever, because that zone was weak to begin with. Buyers are probably, if buyers come up here, get absorbed, taken down back to the middle of the range, they're probably just collecting more liquidity to come back and break that, right? Don't take a short or a long in a blue zone and expect for it to be a trend setter or a trend continuation or a trend breaker or a big move, because it's not going to be. 9 times out of 10, these zones are good for quick scalps, quick 20, 30 point moves. These gold zones right here is the real trend reversal zone, where you can get 50, 60, even 70 point swings. If you're a swing trader, these zones are golden opportunities for you. And these blue zones are really just for you to, get a couple of points with confirmation. It's nothing that's going to change an entire trend, right? Again, nothing is 100% certain, but in the game of trading, you want to keep your risk at a minimum. You do not want to be taking on unnecessary risk and placing unnecessary bets without the proper information, right? So, because if you're going to do that, you might as well gamble. Go to the casino, play the slot machine, and gamble, right? When you're trading, you're not gambling. You're doing things with information, right? So, let's take a look at our next zone here. This is interesting. Let me take a look here. It's 24 to 30, so 6-point range. All right. This might be interesting. Buyers got absorbed up here. Had a maximum of 862 delta. Orders came in, absorbed the buyers, and then boom. Huge downtrend. Okay. Yeah, this might be interesting. Okay. All right, so we're going to mark out 24 flat to 30, 30.50. That is a gold zone. Yep. So this is another example I want to give you guys right now. Just let me mark this out, and then I'll give you my lesson. All right. That's 30.50. Okay. Now we need to go down to about 24, right? 24 flat. Okay. All right. So let me explain this zone. Here's the reason why I'm marking this zone as a golden zone. Not only, if you look on the candlestick chart, you're gonna see that this was this was top of the move, transcended into a fucking massive 40-point candle, 40-point move downwards. But if you look at the footprint, you get some confirmation. Right here, you got 2 point of controls, continuous point of control. So most amount of the volume was accumulated right around at the same exact price level. So around 29.50 to 28.50. You got imbalances here, massive 1104 imbalance here. You got these buy orders that got absorbed. So these buy orders are no longer in effect because they got stopped out on this massive 40-point move down. And on top of that, you got absorption here. This candle, 9 o'clock candle, had a maximum of 862 delta that just got absorbed. And then the following move was a fucking huge dumper. 40-point fucking candle downwards. Definitely took out all of those buyers and fucked them, right? So this is going to be a gold zone. This is going to be definitely a strong area where sellers are going to be defending. This is the beginning of a huge move downwards. And you also got some imbalances, buy imbalances that got absorbed up here. Because think about it. These buyers were coming up 200, 99, 365, 759, 511, 540, 452, 919, 52. These big green imbalances that you see, they were accumulating with anticipation of a break. But they weren't able to get that break. As you can see from this candle, they tried to, buyers tried to step in and they got absorbed and punished for that. They got taken straight down. So this is going to be a good area to defend. Only caveat is that it's a big area. It's 24 to 30. It's about a 6-point zone. So, when it comes to a big S plus zone, like a big zone like that, like a 6-point zone, but it's a good zone, then you want to be a little discretionary, right? Sometimes you can be preemptive, place your stop, and just keep the same size, just be preemptive and place your stop. Or you can wait for confirmation and take more size with confirmation. Typically, though, you're never going to enter a move right when it enters the zone. You're going to want for it to play out a little bit more. So you're not going to get a 6-point stop. You're probably going to get maybe like a 4 to 3-point stop if you can, get your entry right in the middle, right? But of course, when you're on the 5-minute footprint, you're going to see a lot of things that candlestick traders don't see, and it's going to give you some confidence. So, yeah, got some zones marked out for tomorrow. We're back in the game. And yeah, so here's what we need to do now. Go on the hourly chart here and just mark that out. And just let me delete this, delete that, and this. Yeah, all right. This is going to be there. Okay. All right. So here's what we're gonna do. We're also gonna put on the chart trader here. What we're gonna do. There you go. Same with this. All right, perfect. Good. All right. Let's go on ES. Fuck. Let's make a new one. Shit. There has to be a way to have these charts just copy onto each other. Has to be a way. find that out. I'll find that out later. Blue. All right, there we go. All right, there we go. Gold. Put that there. And that's going to be a 24 flat. We got ES and bonds and yields. I don't think that the relationship between bonds and equities have been 100% restored yet. I don't think that it's going to be one-to-one again, because it used to be a pretty good indicator. Bonds and yields used to be a very good leading indicator for the equities market, whichever one you were trading, but not so much anymore. It's been a shift, and that's why they say you always got to adopt, you always got to adapt your strategy, you always got to change it because the markets are always shifting. One thing that's never going to change though is order flow. It's the relationship between buyers and sellers. It's seeing who's buying what, because at the end of the day, that's the fundamental of the market. Market fundamentals are never going to change, right? Always going to have a buyer and a seller. The market is always going to move when there's either more buyers and sellers or vice versa. So as long as you can continue to understand that relationship between buyers and sellers till the end of time, you're good to go, because it's never going to change. Unless there's some crazy fucking shit that happens. Fundamental relationship between buyers and sellers in an auction and in the market is never going to change. It's always going to be the same. That being said, you can master a strategy that is always reviewing that relationship between buyers and sellers, you'll be fine, because that is one thing that's always going to remain the same. The footprint will never change. Footprint will never become obsolete unless the big players can put in ghost orders that are undetectable by the footprint. Then in that case, then we're all fucked. We should all stop trading. Unless you find a way to detect those ghost orders. Right. But for the foreseeable future, it's not going to happen. So we should take advantage of that while we can. All right, perfect. So we have all of our shit marked out, and then tomorrow we'll look at some more zones on the overnight session, and then we'll mark out the zones on the 5-minute candle stick chart and the 5-minute footprint chart. So yeah, guys, that's pretty much it. put zones down here. It's fine. Just delete these and then yeah. So yeah, that is pretty much it, guys. I'll see you all tomorrow morning. Double check here. Got all right. All right. Yeah, that's pretty much it, guys. So, hope you enjoyed Sunday night analysis. I'll see you guys tomorrow morning. All right. Peace out.